Hey guys, Boris Schlossberg from BKT. This week I'm going to do something a little different and special with you. We're not going to review our weekly trades because I'm on the road this week with Middle East Expo and in the Hong Kong office. But I do want to show you a new version of the OO setup that I trade. For those of you not familiar with the OO setup, I invite you to go to the YouTube channel and take a look at the Stop Hunting with the Big Player setup. It essentially revolves around the idea that prices tend to magnetize and move towards whole numbers. And we generally want to run on that momentum and see if we can make money off those trades. The original OO setup basically had a 1-to-1 risk-reward ratio. When prices moved to 80, we try to see if we could go to OO, or when they dropped down to 20 on the way down, we try to see if they could go to OO. And our target was 20, our stop was 20, so it was a 1-to-1 risk-reward ratio. I have since modified this setup, I think, to a much more robust, much more profitable possibility by making a few wrinkle changes. So here we go. I'm taking a look at the pound dollar right now. This is Thursday, April 17th price action. I'm recording this on a Sunday, April 20th, before I'm leaving. So let's take a look, and I think this kind of lends itself very well to understanding how the setup works. Basically, the first thing we do, of course, is want to demarcate the playing field. And the playing field is between the whole figures. So in this case, we're going to look at, let me just adjust this properly. 9,700 to 9,800 on the chart, right? And this is 9,800. So the key thing is we're looking for price action to really have some strong upward momentum in this particular case. And the first thing I do is I want to demarcate the playing field at the 50 zone, because my whole thinking is this: once price action goes in from 00 to 50 and then beyond, the bulls have the power here, and it now percolates my attention. So once we're now above 50, having risen all the way from the 00, there's a strong possibility now that we're going to try and make the run all the way for the other side, the 00 on 9,800. What I've done though is I've now taken a position, whereas I used to take a position when prices would go to 80, now I take a position a little bit earlier. I take a position when prices go to 60. So if prices cross up and go all the way to 60, right over here, I'm going to get rid of the 50, oops, sorry. Alright, prices go to 60, I'm going to get rid of the 50 zone. I am in the trade once it goes to 60, and I'm targeting 00, which means now my profit potential is 40 points instead of 20 points. So it gives me a much larger profit potential. And my stop now is at 40. And I'll tell you why I put the stop at 40, and I think you'll find this very interesting. Because the second most popular place to place stops is, if the first place is the 00 handle, then the second most popular place is the midway handle. So what happens is, if you were to just simply buy 60 and place a stop at 50, a lot of times you're going to get retraced out. Prices will tend to go up and down, test that 50 level several times, and you're just going to get unnecessarily stopped out in the trade. On the other hand, going all the way down to the 40 for a stop gives you plenty of room, and if it comes back up above, goes into 60 and then drops all the way down to 40, probabilities are that you're wrong. The beautiful part about the wrinkle on this setup now is that we have a 2-to-1 risk-reward ratio. Of course, in real life, we don't always get the 2-to-1 risk-reward ratio, but generally the whole idea here is we now have asymmetrical rewards to our risks. Even if we're half right, that means only correct 50% of the time, we have made money because we're making 40 every time we're winning, and we're losing 20 every time we get stopped out. In this particular case, this was a very strong run in the pound, and you actually would have made money. You made money here on the run to 40, 97 to 98, and then another run, I think, all the way up to 99. You would have made money here because at 9,800 you would have crossed over. You would have gotten in at 9,860, and it would have gone all the way up to 9,900. So this would have been an 80-point day for you in a pound. Very smooth, very easy trading, and I think this kind of a setup really lends itself to some very interesting possibilities with much better robustness and much better possibilities for profit. So this is Boris Schlossberg. I'm wishing you the best of luck. I'm back next week. We're going to do some trades. In the meantime, enjoy all these short-term setups. This is BKT.